Alright, I'm just gonna go review some trends and some basic entry. Alright, so you see the market over here, and it basically just pulled back and rallied, but you can't really do anything because it's not really clear. So here I just couldn't figure out what's going on because the market, when it goes straight up like that, that's actually bearish. Why? Because it goes into overbought position and can just sell off until it hits some level. So it just backed off. After that, there was some selling pressure that came in, but it was bought. So sell to buy. And then there's some more selling pressure and it rallied. But the problem is, this is not enough thrust. So with the rallies, you must have thrust. And I'll talk more about that right now so you understand. When you're looking at pullback positions, right, this right here, how much thrust does this have? It has, if you compare the leg to resistance versus from resistance upward, you see it's like 3 to 1 or more. So this has very little thrust above the high. Now, when a rally has a significant move from high to high, that rally doesn't have a shortening of the thrust. It has a good expansion of thrust. So here's the logic, and pay attention. If a shortening of the thrust means a lack of momentum, possible reversal, and is bearish, an expansion of thrust means the opposite, meaning an increase in momentum, less chance of a reversal, and chances for continuation, meaning it's bullish. So the shortening of the thrust should not be just taken in isolation. You should also look for expansion of the thrust, because that is telling you the opposite of shortening of the thrust, meaning there isn't a lack of momentum, there's increased momentum, and the reversal chances and bearishness have diminished. It's very important. All right, very, very, very important. Anyway, so when a market rallies here, it has really bad thrust, so I don't want to mess with it, because all it's doing is really just tapping support. So not my cup of tea. Then it rallies over here, rallies. Here I thought we had a chance because look at the expansion and thrust, but the problem was there's just too much heavy selling, right? So a lot of times if you see a rally and near the high you have that much volume, the rally is being sold. All right, there's a difference between rallies being sold and some basic profit taking off of a rally. This right here has more volume than This right here brick had more volume than any other brick in the rally, so that negates it, because it's going to serve as resistance anyway. Even if this worked, it goes back up here, and what happens? It's going to be in trouble because it will serve as resistance because of the heavy volume pressure. After that, you had a selling wave and confirmation, and then a rally. So this rally has a slight increase in thrust, not the best, but a slight increase in thrust. I don't know how much. First tap, only 3. It went down 79 stocks 5 minutes and pulled back only 3 minutes, 31 stocks. That's a good sign. And if we take a look at what was the retracement from the highest point in the rally, be here, to the lowest point. It always goes to that 61.8. So, markets that have that trend tap the 50 and the 61.8 a lot. So, there you go. All right. After that, market continued. Boom, boom, boom. There was a rally here, but I'm not even sure why this is picking up, because it's so crappy. The thrust is so poor that you have to back off. When you have poor thrust, don't even think about it, right? Because that poor thrust is actually indicating a spring. Shortening of the thrust in the context of a range is a spring, especially when it's reversal action, right? With the biggest price change in 17 waves. So this reversal, spring, bang, reversal. How do you know this is a spring? What if it's just a lower low? Typically no, because it sprung, and look at all the pressure that came after it. There's a lot of buying pressure. This wave is bigger than last 17 waves. 17 waves in the trend. So, sequential 17 waves. So, anyway, long story short, there's something going on here. And finally, you get this rally, and it pulls back. I can't really figure it out. And I think it went halfway, I'm not really sure. Let's try this low. Oh shit. It went to 68 and rallied. And after that, it puked. And now you're getting rallies to the downside. Now, I'm not a fan of this shit right here. This little thrust. So this you have to use judgment on, because if it's, I can use judgment, and I know that from this low to this low is good. Look at all the bricks, 1, 2, 3, 4, 5, 6. That's good thrust. And from this low to this low is good thrust. So you have to use judgment. Does this look like a spring off of this low? No. So that's what you have to, that's the criteria you've got to keep in mind. Come back, tap, and puke. Let's continue. All right. Market gives another rally here. It taps in, but all it does is go to a support. So they're poor reward. And if it tries once, twice, get out, because it's not breaking through. All right, and it's going blue here. So it's a really, really bad sign when it bops up, pulls back on a heavy print. This volume here is the most volume in the last 40 waves. So what's that telling you? That means from the low, there's buying. It's not, is it short covering? Could be, but short covering would, 40 is too high of a number. And then here for sure, you're in deep shit. If you're short, there's a big problem because price and volume are both reversing. And it's going to work on the upside. But they try 1, 2, 3, 4, create that cause, create that range, generate liquidity, bang, pop, and here's the absorption right there. You go up, down, up, down, up, down, absorbing what? Across this level, across that level, absorbing that supply here, right? And then going. Then you have a rally, and this here is like I showed those signals that work and don't work. So this one here was selling pressure, and here you had lack of demand, and it didn't work. Why didn't it work? Because this guy, meaning you had selling pressure, but it was bought. So it's very hard to see that without volume. You need the volume, and I know it's being bought here. Why? Selling to buy. This is in fact a test of this area around here, and buyers stepping in. So you cannot just follow signals blindly. There's always judgment, and one of the criteria is there something that's blatantly obvious that's telling you not to trade? And this is the highest volume in at least 49 bricks, so it's telling you don't even think about it. And this brick here had the biggest volume in 57, so they were buying from the lows. After that, you got this rally. Lo and behold, it's gonna pull back, rally, whatever, I'll probably use this. Taps in. It's too many. Yeah. Tap and go. And here's a lot of sun pressure. It's end of day. So, I mean, this isn't rocket science. All what I'm explaining here is there's many ways to enter the market, right? So you're taught, well, before we talk about entry, we have to talk about edge. All right, all you need in your trading plan is you need edge, you need entry, you need break even. Oh, I forgot stop. Edge, stop, entry, break even, target. This is execution based. The first is analysis, meaning edge is analysis. The rest, stop, entry, break even, target, is execution. So those are the parameters of your trading plan, right? Besides this, you need initial parameters, which may say, okay, what time of day, what market, lot size, what's your daily stop, meaning if you have 2 losses, will you stop for the day? If you have 1 win, will you stop for the day, right? So time, market, lot size, daily stop. I think that's it. Market, lot size, yeah, time of day. Time of day, what market you're going to trade, lot size, daily stop. And then you need, so this should be in your trading plan, this should be in your trading plan, and then there's just a matter of routine. So where's my text? So what's the routine? It's basically mark levels, right? Journal, maybe do a trend review, you know, or a back test. That's it. This is all you really need. And even this is extensive, like marking levels, journaling whatever trade you take, so you have a record. Reviewing the trend. That's the same as kind of journaling, but that's about it. So these three elements, these three sections, right? When it comes to edge, that's the analysis. So then after that, these are the execution parameters. I think that's about it. So what's the edge here? The edge here, there are two types, right? One is, well, trend turn, and the other is trend continuation. That's really it. There's nothing else. The trend turn you can call counter trend if you want, you know, but it's just you're always trading with trend, so that it's not really counter trend. It's looking for a trend turn, and trend continuation is just trading with the prevailing trend. And then what else do you have? You have the two major signals are just breakout and pullback. That's really it. I mean, you're either buying on the way up or you're buying on the way down. So breakout and pullback, and the pullback have different variations. What do I mean by that? Pull back to a moving average, pull back to a 50% or 68%, or pull back to Ice and Creek, or pull back to VWAP, or pull back to a high volume node, right? So all of that is just really buying on the pullback. It's nothing else. Breakout has a variation where you have breakout plus follow through, right? Or breakout just before the breakout, or right after the breakout, or on the breakout, or when the breakout occurs, heavy volume, then buy it. So there's really just variations, but basically you're buying on the up wave or down wave. That's it. And that's it. So that's all, folks. Take care. Bye.